Hi everyone, what's up? Welcome to another episode of Finance Friday. I am really happy to have you guys back on here. As you can see, we have a guest and she's not new on this channel. I'm really happy to have you back on here, Marianne.
Thank you, Susan.
The last time she was here, we had such a long 1 hour conversation about things like life insurance, how do you protect yourself financially, etc. And you guys gave us so many questions that we sat and we're like, you know what, we need to do a series so that we can answer all these questions that people have without being in a rush, without trying to pack all of that in one video. And that's ideally what we are going to be doing for the next 4 weeks. So stick around. If you've not already subscribed to this channel, let this be your cue to do that. And for today's episode, we want to talk about the elephant in the room. Every time someone mentions insurance, every time especially someone mentions life insurance, the first word is it's a scam. and we want to be honest. We want to have a very honest conversation and actually address, is life insurance a scam and why do I need it? So thank you so much for joining me, and we're gonna get right straight into it because we don't want to waste your time. So let's do this. Karibu sana.
Asante.
You are not a guest on here. You're not a new person. So, I mean, though for the people who have not met you, please tell us, who is Marianne and what do you do?
Okay, thank you for having me here, Susan. I know we've been talking about this.
Yeah.
And my name is Marianne Tyro, and I'm the founder of LERISQUE Africa. I'm very passionate about family wealth, especially protecting and preserving family wealth. So what we do is we aim at closing the protection gap, because we understand that most people focus on building their wealth, but not much into protecting what it is that they're building. So we give tools and strategies around protecting wealth.
That's amazing. Why this line of business? Like, why life insurance?
Hey, Suzanne, you're taking me way back. Go ahead.
Tell us.
So a few years ago, I was working for a mergers and acquisitions company, and I was in the insurance department. And I remember I had this client, let's call him Sam. Yeah, Sam was an amazing 31-year-old man, newly married, and he had a young daughter, 6 months old. And Sam, he had come in actually to do his motor insurance. So we finalized with his motor insurance, and now when we were having the conversation, I realized that, hey, Sam, he has all these other things in place, like his motor insurance, home insurance, but he did not have a life insurance, especially since his wife was a stay-at-home mother and with a very young child. So they're all 100% dependent on him. So we're like, okay, let's just finalize. Let's just get you a life cover. Then he was like, okay, I understand where you're coming from. Let's do this.
Yeah.
So Sam now, let's say we started the process, and there's the day now we're meant to now come in and finalize. Then Sam was like, okay, I have to go to up country because there's an emergency. I'll come and finalize the next day. Then I was like, okay, that's fine. So he goes, let's say we're to meet on a Thursday, and he travels on that Thursday. We postponed it to Friday. So he goes, and then Friday reaches, I try to call him. So when I call him, his phone was off. So I'm like, this is so weird, because we know with business people, our phone is never off, because he owned his own law firm. So I called him, I was like, okay, this is weird. I was like, okay, maybe his phone was stolen, but eventually he'll reach out. So only later to be told that Sam died in an accident on his way back from up country.
Yo.
Susan, that thing gave me the chills, because I was just thinking of how close he came to finalizing with now the application of this life insurance, and his family, the family that he actually left behind. I was just thinking of all the hopes and the dreams.
And a young child.
Imagine.
A wife who works from home.
Exactly.
Yeah. Actually
she's not working. She was a stay-at-home mom.
So no work.
Yeah, she had resigned so that she can take care of the child. Yeah. So they were 100% fully dependent on Sam. So I literally watched this family go from 100 to 0 real quick, because he was not paying the rent, paying for the food. Then now he's no longer there. So we're able to get the car paid out, but it came out in his name. The check came out in his name. So the money still had to go through probate.
Oh dear God.
So it's succession. So my question was why some could afford an insurance, a motor insurance of like about 200,000. So you can imagine the car he had, but he could not afford, or why he could not have a life cover, which could even have been way cheaper and had so much more impact. So that is when now the idea came in, when I was still working in my former workplace. Then eventually now when the chance came, I got into my own business.
Oh, I definitely hear you. It's about the people you couldn't save.
Hey,
it really is about like the experiences that people don't talk about, because it really is about like, especially if you're the sole breadwinner in your family, and then you pass on, even if you don't have kids, like as long as you have dependents, then it goes, right? But then, Marian, we need to address the elephant in the room. We really need to address the elephant in the room. So many people, myself included, before I was converted, so many people believe life insurance is a scam. And as a matter of fact, if you're watching us right now, please let us know in the comment section if at all you have had or you believe that life insurance is a scam, or for one reason or the other you've had a horrible experience with it, or you've heard about someone who's had a horrible experience with it. Please let us know down in the comment section below. We really want to kind of like listen to these stories and even advise in the comment section, Marian and I, what people can do in some of those situations that you guys will share. But I'd like to know if you believe or if you've had that life insurance is a scam. Why do you think it's a scam? And I want to actually ask Marian. So tell us, I mean, in your line of work, I'm pretty sure you've had so many horror stories and excuses, reasons, like why life insurance or insurance generally is a scam. So what do people say? Why do Kenyans think this whole thing is a scam?
I love that question, Susan. And I totally understand where Kenyans are coming from. So when you think of insurance, most probably the first interaction someone had with insurance was motor, because motor is actually a compulsory insurance. And I don't know if you've heard of this, that the person who's dealing with the selling, they're so nice and so sweet, but when it comes to claims, it's a horror story. So most people, when they interacted with the insurance, yes, they're paying the premiums, but when it comes to claims, it feels like it takes such a long process, or the insurer is taking them round and round. But majority is because of mostly lack of understanding, or if the agent did not explain to the person how this thing is work and manage expectations, because there's also rules and regulations around that. But then the thing is that now you can imagine you're in a tough spot, because insurance is meant to come to you when life is lifing. Life is happening, and then you're going, someone is stressing you or is taking you round and round. It's maybe just because of, you know, small reasons like documentation issues, or there's some procedures that have to happen. So it was a lot of managing expectations and maybe the experience they've gone through. And now when we get into life insurance, you know, with life insurance also, majority of the products that people have encountered is now like endowment policies, which we're going to get deeper into later. So most people save with this now through the endowment policy, but they don't understand how it works. So 3 years down the line, you've been, or 2 years down the line, you've been contributing. Then you're going to the insurer and they're like, I want my money back. The insurer's like, no.
First of all, you signed a contract for 10 years.
So what do you mean? You can't just come. So it's mostly lack of understanding on how this
product works.
And then now we have to understand, Susan, that also from a cultural and religious perspective. Let's just deal with that.
Oh my God.
Because there's the part where you think that, okay, people are all conning you, or they're all scams, which, by the way, every industry has. But the thing is that with insurance, now you have to remember from a cultural and religious perspective. Now let's even start with cultural. In our households, first of all, we don't even talk about money. And we do not talk about death. So life insurance is talking about both at a go.
Oh my.
You've never heard of, also people say, I don't want to write a will because I'm calling death.
Or when your parent, even if you ask a parent, like, Mom, mkona will, or your dad is like, so sasa mushaanza kunipangia. So I totally
Yes.
get you. So like when you start telling someone, oh, you can get life insurance, I hear you on the cultural aspect.
So people think that, okay, if I get life insurance, because it is tied with their mortality. So if I'm getting life insurance, it means that you're also acknowledging that you'll die one day, which most people don't like to think about it. So obviously they're not conversations that we will have every single day on the table, because we don't talk about money, we don't talk about death. So people just rather shun it away and just not have a conversation about it at all. And from a religious perspective, because I get emails that, okay, that if I get life insurance, does it mean that I do not have faith
in God?
In God. That's
to protect me and protect my children.
Exactly. But the one thing I would like to ask people is, even right now, where it is that you're watching us, because people are like, oh, life insurance is not biblical, right? But I'm always like, okay, you're watching us maybe through your phone or through your laptop. Me, I didn't see those things in the Bible, guys.
But we are using them.
Using it. Money market funds to save up for emergencies, or to put money in the stock market. If we were to go down that direction, I guess we should all have been farmers. Right? But the thing is that I also believe now, if you're going to come at it from a religious perspective, God has also given us wisdom to be able to put tools and structures in place that are going to ensure that our money is managed, because protection is part of money management. You cannot have a farm and not have a fence because you believe and trust that God is going to take care of it. Even you have to put some faith in, some action in your faith. So if you believe that it's important to you to build your money and like you're taking care of your family, it's also equally as important to protect it. So it's not a lack of faith, it's actually a lot of faith, because because you're telling God, okay, I'm managing this, and protecting is really part of management. So it's all about perspectives and how you choose to look at it. So what it is that you keep on telling yourself over and over and over again.
I also think with religion, I find it funny that I didn't even think that someone would say it's not biblical, because like it's actually biblical to pass down wealth, to leave your future generation something. And I'm very surprised, but although I do know that, I think also sometimes it's about like the way that we've grown up as Africans. As you said, money is not discussed, death even worse, right? So when we are trying, and then obviously you're also a young, maybe you're younger than like these people you're trying to advise, and they're like, we've been here, been there, done that, right? So it's almost like, why do you think that you're now the one who knows proper planning, and like you're not the one who wants to start planning for our own death? So I think that is really, really important. I've also encountered someone who thinks that life insurance is a scam because you guys, the people who work in insurance, are in it for the money. Would you mind me asking, like, how are you paid as an insurance agent, or how do you earn your money as an insurance agent? And is it true that you guys are just out to get us? If you don't, because every time we talk to insurance people, like, no one wants to tell you how they earn their money. So would you take us through like that very quickly? Like, how are you paid as an insurance agent? And is it true that some people in your industry would ideally sell us the wrong product, something that we ideally do not need, right? To get their money? And how do we protect ourselves from that happening?
Oh my goodness, Susan, today you came with the question.
I'm coming because I'm like, kila mtu anataka kujua. Because nowadays, even me, I'm very careful with insurance agents. Because you see, this guy is probably selling me this thing because it's going to make them money. So do they care about me?
Okay, let me just go straight to the point. So I'll tell you how insurance agents are paid, and how even for us at LERISQUE, how we get paid. And how insurance agents are paid, guys, we get paid commission. So free is not necessarily free. Yes, we'll give you the free advisory or help you come up with a quote, but it's not necessarily fully free, because when you do get a product through us, the insurer gives us a cut. And you have to remember that is how most sales jobs work. And it's not
even when someone sells you a car.
Exactly. So it's not it's not just an insurance thing. But this is the thing, because when it comes to insurance, it's very close and it's extremely personal. And it's true, in every industry, there's always the good apples and the ones which are not so good. So it's because look at it, let's just be very honest, Susan, that if you are earning by commission, it means that if you do not make a sale,
you don't eat
you
that
don't
month.
eat that month.
Yeah.
So sometimes people do get desperate because you actually have to make a sale. So maybe sometimes they omit some things. You know, like a good example is someone who approaches me and says, okay, I'm pregnant, I need medical cover to take care of the pregnancy. And I'm like, yes, this one will be able to. Not explain to them that it has a waiting period. This
They
thing will
don't
not
tell you that
Yes.
this baby you're
Yes.
carrying will not be taken
No,
care of
no,
because you
yeah.
can't get
Yeah.
maternity when you're pregnant.
Yes, exactly.
Yeah, so they withhold that
they withhold that information. So the thing is that now, because it's a numbers game, and it's like the sales are the ones that are bringing you the income. So it means that sometimes, yes, I'm sure like you sometimes feel the pressure.
Yeah.
But this is the thing, yeah. You have also as a consumer to be able to distinguish. Yeah, there's already now some bit of red flag. So I always tell people, before you even work with an agent, you can sit down and interview them and ask them a couple of questions.
Yeah.
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 You see, because you're not forced to. It's just that also sometimes many people buy from agents because they feel bad. They're just like, I just need to get this person out of my bag. And then 3 years later, you're like, oh, I was conned. But even for you, you actually took part in it. If you didn't feel that this thing was right, you asked the questions, they didn't answer you, you didn't feel that it was right from the beginning, then you also don't really have a right to come later on and blame because you also had a role to play. Imagine saying no it's not a bad thing.
You can actually say no. Do you know when you're saying that we say yes to impress people?
Yeah.
Guys, let me know in the comment section if you have ever invested in something or bought a product, number one, because someone your friend works there, your mother works there, your mother recommended you. No, I mean, honestly,
it's true.
it's that guilt. Or like when I still used to be in corporate and I was employed, you guys, wachalota kuweka kwa hiyo category. You guys will literally find someone in an office setting. You've come with forms and then you're targeting parents. It's like, ukikufa leo, mtoto wako ataachwa na nini? So you see, of course, because there's that pressure, you know. Like imagine, honestly, if you ever want to finish a mother, ask them, ukikufa utaacha watoto na nini? You get, so because of that pressure, someone is just like, any parental instinct is to protect your child. So you're like, you've not even read the form, you don't understand. Haraka since kila mtu kwa ofisi ana feel, na maybe it's someone in the office who brought that person. Oh, there's a friend of mine, they work at and they want to provide this service and I have it. So you feel it out. I think people also feel these things out without reading.
No, that is one of
terms
the
and conditions you don't know. Any limitations or whatever you've not read. So that pressure, I feel like, do you guys go for training for giving us pressure? Like, let me tell you, I see an insurance person selling, I run. Like, because nowadays, there's a time I was at a mall and they're like literally even at the entrance. I see someone wearing like that branded mini. I run because I'm like, you guys know how to convince people. Like, if you want someone who can sell and convince you, it's an insurance agent, True. So I'm like, but how do you, I get you. I think I've had something from you. We should interview
Always
them.
Interview, ask for reviews.
Questions, ask reviews.
Yeah, because if you ask questions, because there's some people, if you ask them questions, they feel like you're even disturbing them. That's actually a very
red flag.
That's a very big red flag. Because if I'm about to buy something and put my money in it, because it's my hard-earned money, I need to understand it. Because, okay, even for me, when it comes to now working with clients, I understand the importance of insurance. Maybe for some it's coming from the heart. They're like, by the way, you need to be protected. Because even for me, I usually have that anxiety based on that first client who died wheithout having been saved. And we want people actually to get this thing the right way. But the thing is that now you have to understand where is this agent actually coming from? Is it strictly from a money-making perspective? Because let's not lie, even you go to job to make money.
Everyone is out here trying to make money.
People should stop saying insurance agents we just want money. When you're going to work for free, please, people. I'm not tuonea sana. So it's just that commissions is just one way of compensation. People get compensation through salaries. As we got compensated through the commission, because that's how the products have been structured. It's only that now the motivation is now
Okay.
could be the issue. Because if
Yeah.
I'm only getting motivated by just making off the money, it means I'll do anything and everything,
Yeah.
just like any other con man.
I
Whether
know.
it's a car salesman, it doesn't matter what salesperson is. If they're motivated just for the sake of the money, obviously they'll try to sell you anything.
I hear you.
Yeah. So that's
Yeah.
why now from our end, so at LERISQUE Africa, we still, we do have two parts of the business, the consultation aspect and now the brokerage. Because even how it is we had started just giving consultation and advisory. But now when it came to the implementation, I
sent
sent someone to an
someone.
agent and then
Yeah.
it's like, they're not doing things the way I would have wanted. Then now it means I had to now open my own brokerage for this to be able to
That's
make
how
sense.
LERISQUE
Yeah.
Africa was founded.
Exactly.
I love that. I love that. So guys, insurance is not a scam.
not a scam,
Maybe the
yes.
person who's selling you, like the way they, whether they give you all the facts or not, or whether they give you all the data or not, that's what determines. The product in itself is beneficial, but I guess, especially like in our country, Kenya, we have a long way to go in terms of full disclosure
Yes,
on
and
what
transparency.
and transparency of what the product is and how it works. Now, because we've addressed that, I want us to really get into it today, truly fully understanding what is this life insurance we keep talking about. Do I take it? Do I just use it when I'm alive, when I'm dead? Do I need it if I don't have kids, if I'll never have kids, all those things? But I really want us to really talk about like what exactly life insurance is. And I know there's so many different types. The more I've been reading about it, I've been hearing things like term life, whole life. There are some that don't pay you money if you don't die. And then there are others that are like, even if you don't die, there's money. So today, for the next few minutes, would you please take us through like, yani utueleze kama watoto.
Sawa.
Layman language,
Sawa.
pole pole,
Haya.
what life insurance is, right? How it works, what are the different types, and what are the requirements.
Okay.
Do you think we can do that?
Yeah, we're going to do that, girl. We're going to do that. It's very important for us to start with what exactly is life insurance and what it is meant to do.
Yeah.
So in not so many words, life insurance is meant to replace our economic value. Susan, me and you, we have an economic value. What does that mean? Between now and the time we stop working, there's something that it is that we're bringing to the table. There's an income that is coming in. Yeah. So that is our economic value. That means that in the case something was to happen to us today and we're no longer there and we can no longer provide, our economic value is gone.
Yeah.
So what life insurance is meant to do is to replace that income in the case of a death. But there's also now living benefits where someone can still have their income replaced in the case of a critical illness like a cancer or a stroke, kidney failure, or even an accidental disability or disability in general. So when you think of life insurance, think of it as an income replacement tool that replaces your income in the case of a death, disability, or critical illness. And it has so many uses.
Yeah.
The first one is definitely to protect. So if you know that there's somebody who's dependent on your income, all I ask you is, right now, if you're to take a trip and never come back, like you just go, you leave and you don't even look back, who's that person who's going to suffer the most? Yeah, don't even start asking death. Right now, you just say, you know what, nimefunga virago, I'm gone.
Yeah.
Who's that person who's going to suffer?
Yeah.
So if there's someone who's going to actually feel the loss of you not being there, it means then you need a life insurance.
Okay.
Yes.
Okay. I think
Yes.
that's more acceptable.
Yes,
You
yeah.
know, and you're like, oh, if you die.
Yeah, you know, if right now you're
It's like
to go,
if I wasn't
a trip
there,
and you're not coming back, like a forever
who
trip,
would suffer?
who would actually suffer?
Oh, wow.
So that is what life insurance is meant to do, is to make sure that now when you're gone, it comes and takes over. The income that you used to provide will still be provided, because when someone is gone, the bills don't stop.
Yeah.
It's not that the rent is no longer needed. The landlord will be like, oh, ipole, lakini rent. Yeah, the education still the children still have to go to school.
Yeah.
So it means that it just takes over from where someone has left, and it does not necessarily have to be death. Yeah.
Yeah.
Something else that can make you stop earning an income could be even a critical illness.
Yeah, like a cancer.
Like a cancer, yeah. Someone could get a very severe cancer or kidney failure, or even a stroke. I'm sure we've all seen someone who's gone through something like this.
Yeah.
So with that, now you can no longer work. Maybe you are out of the office for an extended period of time and you're in hospital. But then, yes, there's the aspect that, yes, you're taken care of by your medical cover in hospital. But what exactly replaces your income? Because if you do not have an income replacement tool, it means that there's people who suffer because the income that you're bringing in is no longer there.
Yeah, and I think I do you know there's something interesting earlier today when we were talking. You told me that there's actually now those what you call the living benefits of a life insurance. Because one of the reasons I know most people have reservations is because you'll find that they're like, this is it's not going to benefit me. It's after I'm gone and after I've died. So like I really love, guys, take your notes. There's actual living benefits, which means that, I may not be dead, but like I'm not able to work because I'm bedridden. I have kidney failure. Then that also replaces my income because you can no longer work. Or if you are disabled and for one reason or the other, you can't go to the market and do what you've been doing, then that can replace that, right?
Exactly.
Yeah, and there's something, before we get into like, I know you're
types,
gonna take us through the different types. Another argument, because today I really want us to have an honest conversation.
Nisawa, Susan. You've been throwing them. I'm not scared. Just continue.
Now you see, me, I'm an investor.
Yes.
You get, I'll probably, inshallah, God willing, have apartments. By the time I'm fika in a particular age, I'll have, like, my business gives me income, sometimes even passive income. Like, people do accumulate investments over, like, their years, right? And even businesses. So sometimes I've tried to kind of, like, have these conversations with my fellow investors. Like, and investing is not just the liquid investments. Even someone has, like, a piece of land where people do farming. They have, like, real estate. They have businesses, etc. So when you're trying to come and tell this person, yo, you need a life insurance, it's just reasoning, right? They're like, but why would I pay for a life cover when I have shambas? If I die, my children will take those. If I let's say if I lose if I lose my ability to make an income, there's still this business, etc. Like, why would I get life cover or a life insurance when I have other investments or businesses that could take care of my children if I'm not there?
Okay. This is the one thing people have to remember is the reason why we get life insurance is because it creates instant liquidity. Susan, we know that investments do not create instant liquidity. You know, especially the number one reason we always hear is in the case I was to die, there's land. But you know, when you die, there has to be succession. Because your children, they don't need food. There has to be succession, which can take even 2 to 3 years. Before they can even get the chance to sell that land. And then again, are you assuming that you're going to die when your children are way older? Because we need to stop making assumptions. Nobody knows for how long we're going to be here. So this is just to ensure, it's a risk management strategy to ensure that no matter what, at least there's a bit of liquidity that can still push the children or the family in like, let's say right now or even in the future. Because this is the thing. Sometimes we have assumptions. Investments, we know sometimes are not you're not sure 100%. Okay, you have a tenant. What if the tenant leaves? Okay, you have an investment that has been bringing you a certain amount of money, but you know, when someone actually passes away, there's a huge need of cash. Now, if you're earning maybe from rental like 30K, we're not really assured that is what is going to be able to take care of your kids. Is it able to now completely replace your income? You understand?
And do you know, there's something you've said, instant liquidity, and then you've mentioned succession. Kwani, how long when you say that an insurance will give me instant liquidity, what do you mean? Because I know, like, for instance, investments that pay you passive income pay into your bank account, right? So let's assume I've died, my children need that money. And at least nilikuwa nimefikiria, nimejipanga, nimeweka ka beneficiaries. Does that mean that the bank will not automatically just give them the money because they are beneficiaries?
No. So you see, the thing is that as long as, like, let's say now from a life insurance, an investment perspective, it's still, if you didn't have any tools, like let's say a trust, it will still have to go through probate court.
What's probate?
So probate means that now you have to go to court and your files are open for creditors.
Oh dear God.
Yeah, and the law of Kenya has to come in to be able to say, okay, this money or this investment belongs to this person.
So that you
the
can
courts
access it. So that now you can finally have that money.
Because now you can imagine, like, okay, let's say, yes, are you even assured that your investments will even reach your kids? Because we already know in Africa the drama that goes through. That's number one. And then number two, we don't know like we don't know if you had creditors or anything like that. So all your assets are just left there for the picking. Some will like, okay, no, this guy had my money, and then they can plead their case. But then now with life insurance, the beauty about it is that it's extremely protected. As long as you've put a beneficiary there, that's exactly where that money will go, and it's usually within 10 to 14 days after someone has made a claim.
So that is like bringing the death certificate or something,
death certificate,
or showing that you have a cancer,
whichever
or a
it is.
disability.
Yes, exactly. So when you go, and especially now, you also have to pick a good insurer. That's even a very important place to start. So let's say now someone has passed away or has a critical illness. Number one, you just need to notify the insurer or your agent, and then they'll send you a claim form and tell you what it is that you need to send. So it's usually now claim form. Sometimes they can ask for a postmortem, and then they can also ask now for maybe what do you call it, the death certificate in the case of a death, or in the case of a critical illness, they'll ask for the doctor's report, and then they ask for your bank account. That's where now they'll deposit.
And the money is sent.
Yes, and the money is sent. So you see, people can grieve with a peace of mind. Without having to wonder, now what do I need to do? Because the thing is that the reason why maybe you bought some property is because you want it to now grow, and maybe for the, what do you call this? The asset value to go up. But then if it's urgent, like someone has died today and they need to sell today, first of all, finding a buyer is not that easy. And
land is not easily liquidatable.
There's number one, finding a buyer is not easy. And then number two, you might have to sell it at a throwaway price. And number
you're desperate for money now.
And even I've gone through cases where people had left rentals. Sometimes when people find out you as the owner is dead, they don't want to deal with your wife. They'll be like, not even they hammer, they're like, nitakulipa baadaye. They just like, they just bring you stress. How assured are you that your people can also manage your property and the wealth the way you could? So it's important to put now more tools and more structures in place around that, because you have to remove all these assumptions, because now you're assuming, okay, this person knows how to manage. You're assuming this land will be sold right in the smart, like right in
the moment. Even when I'm thinking about, because I talk to so many people, and guys, if you've gone through this, please let us know in the comment box, where like your parent, your uncle, or someone in your family, like they died very, very wealthy, but then like it's almost like their children have never benefited from it. Like they've actually never benefited, and you've been in court for years. I think even the last time we did a video about this, someone reached out and they were like, I need a contact to Marian, because like we've been going through this same experience, where like and then of course there's the feuds in families.
It's too dramatic.
Like who will take the land, of course, because the guy didn't have a will, or any
children start cropping up,
or children start cropping up that you knew nothing about.
Exactly. You see, with life cover, someone, as long as you're not in the beneficiary list,
the money cannot come to you.
So just think about life insurance is that minimum, for sure your people are going to get.
All
these others are going to be eaten out, especially now is when with succession, where people are going to get the liquidity even to pay lawyers, the cash to pay lawyers.
The money is not even there.
Because I've seen people who are asset rich and then they die, their families don't even have money to pay a lawyer.
Do you know what? I love that, guys. So when you think about life insurance, think immediate liquidity. Even if we have other investments, akina sisi feeling investors, like you really need to think about your family in this moment where they are grieving. There's lawyer fees, there's that whole court process to finally, as much as all these assets will probably finally be transferred to your family or to your children, you need to think about where will the money to pay lawyer fees and to follow up and for food, etc. see come from while this process is ongoing. Is that it?
Yeah, exactly. And you know, Susan, I'd also told you how I am going through it. I went through succession.
You told me your
so
story.
So if I, like, in as much as we had a very small life cover with my husband, but it's the one thing that sustained me, and I was able to get back on my feet.
Yeah.
Because we had now the assets, but quite a bit was in his name, so still has to go through succession. And how would I have survived with the kids? I don't even think I'll be here talking to you.
Yeah.
Honestly, because the thing is that even if someone was to fall sick nowadays, with very good medical, with improvement in the medical space, the chances of you actually living is very high. But the biggest problem is when there's no money.
Yeah.
Now you start being a burden. So now you can imagine if there is already money, because with like a critical illness, if you take it as now an additional benefit to a life cover, it's paid out as a lump sum, so that now you can focus on the healing.
You're able to organize yourself.
And organize yourself, and so that now when you get back, you can bounce back. Just think of it as a bounce back plan.
I love that. A bounce back plan. Did you hear that? I love it. So very quickly, take us through the different types of life insurances and what there is.
So we first have what we call term life insurance. This is the vanilla of all insurances, the simplest one that is there. So with this one, it is a cover for a specific period of time. So you only want protection for, say, 10 years, 15 years because of a particular reason. Let me give you an example. Of a very good example of a term life is mortgage insurance. So if you take a mortgage today and you want to know, okay, in the case of a death or a disability, my people will never lose their house. So I take mortgage insurance maybe through the bank, so that in the case anything is to happen when I'm still paying for the mortgage, the payout will be done to the bank and my people will keep the house. So you see, with a mortgage, it actually has a specific end date. So you do not need any protection after that, because you've already, like, let's say you've taken a 25-year mortgage. After the 25th year, why do you need mortgage insurance when you already have access to the house? You have
ownership to the home.
You didn't die. Nothing bad happened to you. So at least you've already finished paying for the house. So the mortgage insurance just falls off. So we find that majority of people who use term life are people who, especially in business, people who need who take a loan, and there's some people who are like, you know what, if you're going to take a loan through us, we need to make sure that even in the case of a death, that this loan can be paid now through the life insurance, so we don't go and fight with your family during succession. So they're like, okay, you want a loan for the business, okay, make sure that you also take a life insurance. So sometimes you don't need it for life, so you only need it for a specific period of time. And then also some very serious investors, they're like, okay, right now I'm in my wealth accumulation stage, and I only want to protect this income, or my income, for the next 25 years, because I believe in the next 25 years my child will be out of the house. They'll not really need any protection.
They won't need money.
They're
grown.
Yes, exactly. Because remember, term life is the cheapest life insurance. So someone here is investing aggressively, but they just want to know, even if something was to happen to me in year 5, because I'm now no longer there to continue with this investment journey, the life insurance will come through to take over. So just think about it this way. Even when it comes to life insurance, you are in your investment journey, but then we do not know if you're going to get to the very end. So life insurance is meant to kick in where it is that you could not continue.
So
some people, just to save cost, they take a term life insurance for that.
We'll get that one is the one. That one is the one where, like, after let's say I took a 15-year term life insurance. After the 15 years, then it's lapsed. Is it like how I pay for car insurance?
Yes, it's like how you pay for car
insurance. And then when the year is over, I renew. So it's not like they're gonna pay me back.
Exactly.
There's something interesting you told me that for parents, term life is usually a little bit encouraged, and especially for maybe, let's say, if you're a single parent, because you're looking at it from the perspective of, let's say I have a firstborn and a secondborn, both maybe in PP1, PP2, and you're looking at this child's life, and you're like, if today I died, let us say today, anytime when they're still depending on you, they have no one else. They have nothing else, right?
Exactly,
So you estimate, and you're like, okay, in the next 25 years or in the next 20 years, this one and this one will be done. They'll probably be working a job or wamemaliza campus.
Exactly.
So you insure your life for that period.
Exactly.
Is that it?
Yeah, you're very right. So we always look at the age of the last born. When is it that they're going to leave the house? So you're like, okay, that's why you have to structure an insurance policy that makes sense for you. Now we see, this is now it's an advantage and a disadvantage. So the advantage is that it's very affordable. But then the thing is that now when the 20 years are over, the money is gone just like that.
And now that is where people start saying this thing is a scam.
Yeah. So you see now, that's why I always give an example, because most people are like, oh, term life does not make sense. But I'm like, okay, you've had a house and you get a security guard who's been with you for 15 years. You've never had a break-in at all. Does it mean that this security guard was useless?
Ooh, tell us. Does it mean?
Yeah. So that's why people need to understand the space of protection and the space for investment. So the moment now, because of how life insurance has been sold for the longest time, people come at it from the investment perspective.
You want your money back.
You want your money back. But remember, this is something that you're putting towards protecting.
It's a protection product, not an investment product.
No, it's not. Yeah. So nowadays there's also term life, which you can get your premiums back, but they're a bit more expensive. So if you want to maximize on the term life, you just be like, you know what? Like, let's say I can put 5K aside or 10K aside every single month for the next 25 years. If nothing happens, I'm not going to feel the pain of that 10K. It's just like you putting money into a security company. If nothing has happened in 10 years, are you going to feel bad that nothing happened?
No.
Exactly. So now the only disadvantage maybe with term life is, let's say, for example, you got a baby who did not expect in 10, like let's say in year 10.
Yeah.
So now, let's say, for example, you got this child in year 10, so you have only 15 years to go. At that 15th year, the term life is over. So it means you still need more protection. So you see, now taking this life insurance later is more expensive
than
because you'll have to take
younger.
another one. Yeah, because with a term life, when it's over and you still have a need, you have to get another term life. So it's good now, even as you're structuring, you can even have multiple policies for different things. Yeah, because for me, let me tell you, I've used my term life. I'm currently also aggressively investing towards my children's education. So I only want also to protect just that term of their education. So for the next now, let's say 16 years. So I'm like, you know what, right now I'm aggressively investing because at least I am knowledgeable when it comes to matters investment. So I'm like, in the case anything is to happen to me in here, I want this specific amount from the term life to take care of the education. When we go to whole life, I'll explain why I did also take another one there. Yeah, but for term, because remember, I'm only investing for 16 years, so it actually has an end. So I will not feel the pinch because I'm just like, you know what, it's a protection plan.
Oh, I hear you.
That's how I look at it.
So that's a term life. That makes total sense.
We just need a mindset shift. Remember, insurance is protection. Investment is growth. When you just get there, you'll go very, very far. You won't feel like you're losing or you're wasting your money. If this thing, because people are like, oh, what if nothing happened? But what if something happened? Because they're like, oh, you know, yes, the chances are low, but the reason why we take insurance is because maybe the probability may be low, but the impact is high.
Oh, wow.
That's why we take insurance.
Like the possibility of these things happening is quite low. But if it does happen, it can bankrupt you. It can obliterate a whole family.
Yeah, because like, let's say right now, I put about 10,000 for a 15 million shilling policy. If I was to put that same 10,000 in an investment, let's even say a money market, and God forbid someone passes away in 1 year, that 10,000 maybe will just be 120.
That's true.
But if it was a life cover,
you're getting the full payout.
Yeah, the full 15 million. So you see, it's a risk management strategy.
I hear you.
Yeah.
Okay.
So
tell us about whole life.
Yeah. So whole life, that one, it has no end. So it covers someone for the rest of their life. So it's what we call a permanent cover.
Okay.
So this whole life can be used for both protection, especially protection in the short term, and inheritance planning in the long term. I realize Kenyans love this
inheritance
product.
Hata mimi nimefurahi tu nimesikia tu inheritance planning.
A good man leaves an inheritance for his children's children.
Yes, please.
So how this works as well. So you're like, okay, I want to protect my kids, but I don't want that this thing will end.
It will lapse.
You don't want it to lapse. Yeah, so it's just a bit more expensive than term life, but it's still affordable. Yeah, you can get something within your budget. So you're like, okay, I want to still protect my kids within this next 20 years, but I want to know even if nothing has happened to me in these 20 years, yes,
they will still get something.
Yeah, I can stop paying these premiums, but this cover goes on for life.
Oh, so you don't pay it until the day you
no,
die?
No. There's those whole life. So there's different types of
Yeah.
whole life. There's the ones which you have to pay till 80. There's the ones which you have to pay till the day you die.
Can
So
I take like a 20-year
Yeah.
whole,
Yeah.
and then after the 20 years are over,
Yeah.
I stop paying
Yeah,
and
but
I
it's still
and I chill?
Yeah,
Okay.
that's the product that is actually very, very popular in the market.
Okay.
Because now the reason why I'm not a very big advocate of the ones which you pay till 80, because I tell people after age of 65,
Very
How do you know-
few
how are you going to
instances
pay?
you'll be having liquidity coming
yeah,
in.
exactly.
Yeah.
Because there's also that aspect. Okay, yes, maybe you can say, yes, I have a pension that you could pay, but what if you forget? Because there's
Yeah.
Alzheimer's, there's Parkinson's.
Kuna uzee.
Alafu ndo kuna uzee. So afadhali hii, which I can control. Okay, I
Yeah.
pay until maybe I'm 50 or I pay till I'm 60.
And stop
then
there.
I just stop. But my children are assured of an inheritance.
That's
so
good.
between now and my children maybe being 25, when they still need me, they are protected.
I love that.
And then even after that, now I'll stop paying the premiums, but the amount of money that comes to them, it's most probably they don't need it, but it's a good gift. There's nothing wrong with giving your children a stepping stone in life.
Yeah.
Because
I wish we had that.
Hey girl, hey, maybe
tungekuwa mbali.
hii biashara yangu sijui ningekuwa na 20 employees.
I know.
Anyway,
Yeah.
so that's this is why I tell people, when you even get a life insurance, it's for visionaries, because many people can even barely think about next month.
I know.
You're thinking about the next generation.
Yeah.
So it means that you have such a powerful mindset, knowing that, okay, I'm not even doing this for myself.
Yeah.
And then with whole life, it still comes with the riders, the additional benefits like critical illness and disability.
And disability.
as
I
well.
love that. Endowments.
Yes, endowments. Yes, so these are the most popular products currently in the market. So they are insurance, life insurance products which also have a savings. So it's a combination of like a life insurance and a savings. So what it says is, okay, most people use it for education purposes. So they call it education policies, right?
Yeah.
They're like, okay, my child is going to school in the next 15 years. So I want to take this endowment policy. So in the case something was to happen to me, my children will still be able to go to school
To get something.
And
Yeah.
even if nothing happens, at least at the end, when they
You
call it
get
maturity, you get something as well.
They call them like bonuses or payouts.
Yeah, the payouts,
Yeah,
exactly. So you see, endowments, there's so many different types and many work differently. There's some which, like let's say you take it now, if someone else dies in year 5, okay, the premiums are waived, but the family can only access the funds later.
Oh, yeah,
There's some which
yeah,
give a bit
yeah.
now, but then even like later on for the education, they'll still be able to receive it. So it just depends on which one you take. So the endowment policies in the market, to be honest, the ones which I've seen, if I was to even like, let me just be very, very transparent, of majority, 80% to me just don't make sense. 80 to 85%.
Especially returns wise.
Exactly.
Yeah. I saw that even when I was reviewing like one of my clients' investments, like they are getting even lower return than a money market fund. But why is it so popular though? I think it's popular because Kenyans, again, there's something you've said that has just struck me.
Yeah.
You've said investing is growth, insurance is protection, right?
Yeah.
So I feel like why endowments are very popular now is because they're promising both. And because we don't want to, we want to feel like, oh yes, I'm protecting.
Yes.
But you also don't want to like let the money go.
Yeah.
You're like, I also want to feel like I'm investing. But like,
exactly.
I think even the last time you were here, you really explained it to us, like just so that we don't even get so much into it, that an endowment, yes, it gives you an investment return or a return on your savings, but not even enough that can even compensate you for inflation. And then it also gives you protection, but you're not fully protected. So it's almost like it's a raw deal on both ends.
Yeah, so I always tell people it's like you're trying to make a table. So use a saw, which is also a hammer. It might cut you or it might not do the best that it should. So it can be good to separate. So for people who already have endowment policies, just go back and see if the sum assured makes sense. So if the protection is not enough, just supplement that protection. Or if now that's the only way that you're investing, because people's ways of investing is having multiple endowment policies. So it's important now to actually looking at other investment strategies. Insurance policies are not the way to
to invest even for your child. And I'm like, and we're not saying that don't take an endowment policy.
It depends on your goals.
Alafu, if you've already taken one and like there's no going back, what we're saying is look at where the road deal is at. If it is at the investment side, then supplement that endowment with more investments for your child's education, for example.
Because now
like bonds.
Because now you'll reach what now, you know, I've done so many reviews, like so many. So what usually happens is at maturity, someone realizes that this money is so little, it doesn't make any sense. Someone told me it's in pocket money. So the thing is that you have to work backwards. Like even in any goal, be like, okay, this is what you expect the children's education to be. So you're like, okay, how can I work towards that? Because for some people, it's not, most probably the reason why many people still take it is because it's a disciplined way of savings. You see, with something like a money market, people can withdraw. With this one, someone cannot withdraw, which can also be a plus or a minus.
But is our indiscipline supposed to cost us?
It has to cost.
I would rather work on my discipline than
So it means then if you cannot be disciplined, you should take if you take this product, then
be willing to lose out on the returns.
Exactly. So your discipline is costing you anyway, because I always say, even if you're to put money in an investment and you're not disciplined, you'll even end up with zero, which is even worse. So you see, many people do not understand these products before they get in, and then they end up losing almost everything because they're trying to pull out their money. They didn't have an emergency fund. They've lost their job. All their money was towards an endowment policy. They're trying to
get out, and you can't. If you get out, you lose out. No, I hear you. So you also mentioned, I think, unit linked.
Yes.
What are those?
So unit linked is now a it's what can I call it? It's like a combination also of a life insurance, but now with unit trusts.
Like a money market fund?
Usually, mostly like balanced fund.
The balanced
or
fund.
Equity fund. So there's a minimum that maybe goes towards life insurance. Like, okay, you'll have a life insurance of 5 million, and then the rest of the money is being
invested in a unit trust fund.
Exactly. So you're like, okay, I have 10,000. Then they'll be like, we can give you this amount of money for life insurance, then the rest you're investing. So for such cases, I always say, why don't you just invest it yourself? Because you're paying very high management fees, which you could just have done it yourself. But we know the biggest problem in Kenyans is discipline. So the biggest
discipline, pure lack of confidence. Because unaona msichana kwambia, you don't have to worry. We will do this for you on your behalf. We'll invest on your behalf.
It makes life easy for people.
It makes life easy. And this is one of the reasons why, guys, like, we have this channel and we have resources. One thing I keep reminding people, and I hope that I've encouraged you to do that with this channel, is that yes, while you can get investment analysts and investment portfolio managers to do this thing for you, learning how to, I feel like financial literacy is a basic life skill.
I don't know why it's not taught in school.
Right? You see, like, the way it's common sense to know how to tie your shoes, etc. I feel like even if you don't know, like, don't say, oh, you know, I'm not a finance person. There's YouTube content, there's coaching, there's classes, there's no excuse why you shouldn't start on that journey and give yourself a year or two to learn how these things work. So that even if you decide that you want someone else to do it for you, it won't be because you're so blind and you're so green that you know nothing about it. It will just be because you're willing to delegate. But even as you're delegating, you understand what they're doing.
Exactly.
I think that's so important. Lastly, last expense.
Funeral covers. Guys, how many WhatsApp groups are you in?
Don't do that. Utakujiwa.
Wait, guys.
They'll come for you.
Yeah. So you see, this is the thing. So what a funeral or a last expense does, it pays out literally within 2 days after someone has passed away to help with the funeral costs. You see, this is why I told you, we spoke from the very beginning, we don't like to think of these things, but they come and bite us in the end, because we know that funerals are not cheap. And anywhere we can get any sort of help, let us do it. So we need, now with the funeral insurance, what you do is you do pay premiums, and then at the end of the day, you, in this case, someone passes away, it could be either you or you can add your family, even extended family, parents, whatever, aunties, uncles, whatever it is. What happens is, in the case they pass away, within 2 days, there's a payout.
And you choose what to do with that money.
And it's usually extremely affordable.
Okay. Thank you for that.
So please, guys, it's very important. If you can, it's even cheaper if you take it as a group. You see now the group you already have on WhatsApp. now start contributing towards
and take
funeral
last
cover.
expense
Yeah,
for everyone.
exactly.
So that
In the case-
if
yeah.
your children add me to a WhatsApp group, Miriam,
exactly.
hey,
So see,
tutakosana.
itakuwa sasa ni mchango ya the group.
Yeah.
You see, because it's when
Yeah.
there's numbers, it's even more affordable.
I wish more people would even do that, like
Yeah.
in chama groups
Yeah.
or something of the sort.
Yeah.
Guys, we are learning. Let us know in the comment section which of these 5 different types of insurance covers sounded attractive to you. And so we need to wrap this up. We've been
We
having
can
this
talk.
conversation for almost an hour.
Yeah.
But I love it because
Yeah.
we are learning, right? So Anto, I had a couple of questions for you. And I want you to help us to answer them because, you know, we want to know, how do we choose companies? What are the requirements? How much money do we need? etc. Right? So maybe the first question I had is, how do I choose a good company? Because people who can character develop you in Nairobi are insurance companies. So what do I need to look out real quick when I'm choosing a company?
It's very important more than anything to look at the financial strength because remember, you are putting this money for a very long period of time, so you want to make sure that these people can actually pay. Look at the reputation of the company. So do these people actually fulfill their obligations, or they take people round and round? So always make sure your ears on the ground. Yeah.
Okay.
Another very important thing that I prioritize is the claim settlement ratio. I prioritize a claim settlement ratio of 98% plus. I want to know that no matter what,
they are
going
pay
to
the
pay.
money.
Yes.
Yeah.
Because 90, still neither here nor there, but a good solid 98 is a very good place.
Where do I get like that kind of information, like settlement ratio, or now is that where you come in?
But now all this information is in the IRA website, like
wow.
IRA.co.
The international international retirement
insurance regulatory authority.
Insurance
the
Regulatory Authority,
Yeah.
IRA.
This information is just public, so it's good to now just
we will
always
put
find out.
a link down below, okay?
Yes.
So that's what to be on the lookout for. What are the requirements? If I wanted to get a life cover, are there things, okay, what do they require from me?
So first of all, obviously they'll have to send you a quote based on what is the cover that the level of limit you want, or the premium it is that you can pay. Then after you're okay with that, so you have to fill in the application form. Yeah. And you have to fill in what they call a financial questionnaire, because they have to know that based on the amount of cover that you want, you are not like trying to get too big a cover. Because you imagine, like, let's say Susan trying to get a 500 million shilling cover and you only earn 100,000, they'll be like, you're overinsuring.
You're overinsuring. Yeah.
So there's also medicals that are required. And medicals are usually over a certain limit. Different insurers are different. So
wait, I must have a medical insurance for me to have
you
a
have
life
to do
cover.
medical checkup.
Oh, medical
The insurer has to,
checkups.
because remember, insurance is dependent also on your health.
Oh, wow.
Yeah, it's dependent on your health. So they have to go and see, am I willing to take a risk on you, Susan? That's why for people thinking that you can get an insurance at any time, it's not true. So get it as young as you can, because it's dependent on age. It's
I
dependent
actually
on
wanted
the
to
medical.
ask you if there's an age limit.
Usually like around 60.
So up to, like, if my mom is 55, can I take out a cover? But it is going to be
very expensive. Yeah, but if she wants to leave you guys an inheritance, a cash inheritance, why not?
Mom, if you're watching me, I need you. Anyway, I'm playing.
Yeah. So yes.
Okay, so those are the requirements.
Yes.
Cool.
Medical covers. Medical checkup. So that means mostly they'll check your blood for now things like HIV. They check for blood sugar. They check for cholesterol. So make sure that you're very healthy.
Eating right.
Eat right.
Wakinipata nazo yo imeenda.
Haijaenda, labda itakuwa
just a higher premium. I'm a risky client.
Exactly. So another thing some good underwriters do, they give you a chance to go and either lose weight, because BMI can also be make your bump up your premiums.
Miriam utaishi kunishangaza. Ati unaweza enda sasa, go lose some weight, move from obese to this BMI, and then you can come back for the cover.
Yeah. So they can come back and
weight loss goals.
Yeah, because actually many of my clients, that's what they're going through. Like maybe they came in and then now like, okay, this thing, your BMI is high. Yeah. And now it's not discriminatory. It's just that the insurer has.
It is what it
it is
is.
what it is. It's just a requirement. So we encourage, because remember, BMI now comes maybe with other risks. So just go and work on yourself. Yeah, that's why with insurance, I'm always like, make sure that you're always good. Just take care of your body.
And when someone comes to you, do you advise us on all of these things in terms of like your requirements?
Yes, I'll let you know.
Okay. Now let's talk about exclusions and limitations. Can I be like, there's this YouTuber I watch.
Yes.
He does crazy risky things for content. You know, okay, I usually ask, and we used to we argue with my friend, and I'm like, hawa watu wanafanyanga hizi vitu wanakuanga wame-insure their life such that as in if anything happens to them, like because there are people who do crazy things like hanging off a plane, you know, like for content. So are there like limitations and exclusions to like getting a life cover, and like can I insure my life and be like flying off of planes?
So now when it comes to that, then you have to disclose to the insurer. You have to be, if there's one thing I can advise everybody, be very, very open with the insurer. So let's say now you are someone who does now extremely risky things. There's a place now within now the application form. It
to
asks,
fill in.
Yes. Just like, let's say, for example, if someone is a smoker, that one will also affect the premium, because when it comes to smoker and non-smoker, people who are smokers, the premiums tend to be a bit high. So it's important for you to disclose. So if you did not disclose and something was to happen to you, let's say you die from lung cancer, or
and they find out you are smoking,
find out that you are smoking,
they ain't paying.
They will not pay. So there's a limitation there. So it's always important now to make sure that that is taken care of. So there's exclusions, normal exclusions, like let's say you are drinking and driving and then you died, or you used drugs, you overused drugs, because that's already illegal. Paying? No, it's already illegal.
Hey, don't drink and drive.
Don't drink and drive.
Sir?
Even with medical, same thing. Like So always make sure, like because now they say you took. You did that intentionally.
You took your own life.
Yeah, exactly.
Oh, wait. Would they do that if I committed suicide?
So it does pay for suicide nowadays, but there's a waiting period.
There's a waiting period.
Yeah, but now it gets a bit more complicated. So I'm just like, just don't.
So it just depends.
Yeah, it just depends.
All right.
Yeah, and then there's other exclusions. And remember, it's also dependent on which insurer you take.
That
so
you're using.
Yeah, different have different exclusions. Like let's say something like mountaineering. That one is usually an exclusion. So that's why, like, if you are someone who likes going mountaineering, like Mount Kenya and Kilimanjaro, it's also risky. Please just include it in the application form,
so that they don't
so they
fail to pay because you had already disclosed.
You have to disclose everything.
Okay, so it's not like watakunyima insurance, but definitely premium itapanda kidogo.
Premium itapanda kidogo, lakini ama labda for your budget, the sum assured itashuka.
Okay, now everyone who sells life cover tells us that get this insurance, there are tax benefits.
Yes.
What are the tax benefits?
So there's a 15% tax relief to a maximum of 5,000 a month, which is 60,000 a year. So now what usually happens is every year you get a tax certificate. So when you are filing your returns, include that, so you get a relief.
Oh, really?
Yeah. So the KRA will not give you your money back, but at least like
they will reduce the amount of tax you're paying.
Yes.
Okay, that's amazing. Last question. I know I have so many questions. This is my last one.
Yes.
So I sign up for a life cover. And you know, life happens. I lose my job, my business, maybe I'm not getting the income I used to do. And there are these premiums that I committed to pay. And y'all are not very good people. Because when someone is unable to kind of like service the premiums, then like the payment, or rather the payout is...
The cover lapses.
Yeah, it lapses and it's affected, right? So what are some of the tips you can give us? You know, if I have a cover and I'm just trying to think, okay, I want this cover, but I'm afraid. What if I lose my job and all the money I paid for, ipote? What can I do?
So number one, pick a premium which you're also going to be comfortable with. Yes, it's important to start with an amount that makes sense, because even when you're getting a life cover, that's the question we didn't answer. Like, how much life cover do you need? Usually, you have to make sure that it's something that can replace your income. Rule of thumb is usually 10 times. But if you want to calculate, we can send you a calculator on like the exact amount. But usually, let's say roughly 10 times, because it depends on whether you have a loan. your annual income.
My annual
so
income.
if your
Okay.
monthly income is 200,000, annually is 2.4 million.
2.4.
So
So
you
I
should have
need a
about
coverage of
24
24 million.
Yeah, exactly.
Okay.
Because if you're to put that 24 million in a low risk investment of 10% per
At a
annum,
bond.
yeah, at a bond,
Yeah, you
so
have
kutakuwa
good
your
passive
In
income.
good, yeah, your family will still have good passive income.
Yeah.
So I always say then for you to make sure, in the case of you are to lose your job, number one, make sure that it's a premium that you're comfortable with.
With or without a job.
Yeah, exactly. Number two, have an emergency fund. By the time you're having this thing, I hope you already have started building your emergency fund and include that cost within now the emergency fund
I
as
love
an
that.
expense.
It's like how we include loan
Yes,
repayments in
exactly.
emergency fund. So
Yes.
nikicalculate emergency fund yangu ya per month, I put all my obligations including the insurance premium. Okay.
Yeah. And then the other thing is now, depending on the insurer you have, some can restructure it downwards.
Oh yeah, I've had that. Yeah, you're
you
like
can be
maybe
like,
you are paying 16 and now they can bring it down to 8.
Exactly.
Yeah.
So you can restructure it down. So there's always ways. Just make sure you have a good broker and also use a good company, because there's nothing that's impossible.
Yeah.
Or some other thing I've seen people do is they have bonds which specifically pay for their premium. So put money in an investment which can take care of your premium in the case you were to lose your job. That's also another way. Yes.
I love that. Oh wow. I love that you mentioned get a good broker,
Yes.
get a good company.
Yes.
And I know that you help people to come up with this. So maybe as we wrap up, tell us how we can reach you and how you would help us with this service.
So in the case you want a life cover, getting a life cover is free through us. And you can just easily fill in the life cover form. You just say, I want a life cover, and then we're going to get back to you with a free quote. And then at that point, you can have a conversation, especially now if you have any other questions. But the form is pretty straightforward. So we'll give you a free quote, and you can go through it. So it's just like now you tell us, okay, based on what it is you fill in the form, we're going to give you a specific cover based on what it is that you need. And then now we can carry on the conversation from there. So that's just one of the services. We do also offer advisory, and we will also share the link in Susan's.
I'm gonna be putting the link down below, even the form. If you can provide
I'll
the form,
form,
I can put it down below. So guys, you wanna stick around. Today's conversation has taught us a lot about life insurance, but like another question that we got the last time we had this protection conversation is about estate plans, wills, and all that, because that is also another level of protection. So next week we are going to be talking about wills, estate plans, and trust, and Miriam is still going to be here with us to take us through. So this entire month is all about financial protection and understanding these things. If you'd like to reach her, I'm gonna link all her details down below. So thank you so much for joining us on yet another episode of Finance Friday. We're gonna see you next week. Bye.